Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, November 27th, and this is the weekly market update. First, the disclaimer, anything that you see or hear on this video or podcast is to be taken as informational only. I am not a financial advisor. I cannot give you personal financial advice. Please do your own due diligence. It's your money. It's your responsibility. Remember, I'm just a guy on the internet. Okay, so I guess the first thing or the main thing that we need to talk about this week is what occurred on the shortened trading day on Friday, which is the NU or new COVID variant did what Biden could not, and that's substantially get oil prices down. And so again, it was kind of interesting watching this, how the markets now work, right? There's not much nuance in these markets. One of the things that I've detailed or talked about for quite a bit of time is the fact that if you're going to participate in these markets going forward, or even in the past when I was talking about this on a going forward basis, you need to get yourself ready for big volatility. Why did I say that? Because we're in a time in the markets where news flow happens very quickly. Algorithmic traders, i.e. computers, have the ability to operate independently. And as soon as something happens, you get instant reactions. And so what basically happened is, the day after Thanksgiving, which was Friday, you have very few people at the trading desks, okay? You have people who have closed their book out for the rest of the year. There's not that many people around. And then you get this news out of South Africa about this new supposed variant called the new variant, apropos, I guess. And immediately, a sell-off begins in the oil market, right? Because the first thing that happens is the fear that, there's going to be less demand because there's going to be lockdowns and there's going to be travel restrictions. So therefore, i.e. there'll be less oil demand, therefore sell off oil. And so once the selling begins, there's no buyers there, right? Because nobody's there. There's nobody covering short positions. There's nobody doing anything except for all this massive selling coming in. And so once certain levels are breached, that turns from liquidating long positions into putting on short positions. And then that spills over into the equities, right? The oil equities, they start to get sold. And so you have this cascading event that we see here on the chart where you have this extreme amount of technical damage. I think down 13% in one day. This is West Texas Intermediate Crude, now down at about $68 a barrel, closing near the lows, right, breaching the 200-day moving average. We talked last week when I talked about the oil markets, I said it was a possibility that we could see the oil price pull back and even all the way back to the 200-day moving average. I didn't think it would happen in one day, but this is the kind of volatility that we can expect. So just to put this into some perspective before I get into my commentary. Let's see. Oh, okay, here's Javier Blas. It's good to go to somebody like this on Twitter today or yesterday. Chart of the day, Brent crude oil is down more than 10% today on fears of a new COVID variant. Before today, Brent had only fallen 10% or more on a single day in 14 occasions since the futures contract was launched more than 3 decades ago. So keep that into perspective. I mean, this is an extreme move. It's a flash crash, if you will. And he goes on to say, why this happened. It's a perfect cocktail. Extreme fears about the new variant in one of the lowest liquidity days of the year, as we talked about, plus Brent breaking below key support, 100-day moving average, and lots of negative gamma kicking in, and you have a flash crash. So at this point in time, we don't have enough information to know what this new variant means. When we had the Delta variant, that was going to be, the end of the world, and it wasn't. We are now I'm just going to give you my view on this. Typically, and from the information that I've been able to study, I'm not going to get into, whatever the reasons why. For the most part, viruses mutate, right? They continuously mutate, regardless if they're COVID, flu viruses, whatever. When they mutate, the virus has one objective and one objective only: to continue its lineage, to reproduce. That's all that it wants to do. It just exists to reproduce. And so it will typically, what these things typically do is they will mutate into the ability or select for, during their adaptation, to be more transmissible but less lethal, which makes sense, right? Because the virus doesn't want to kill off the host population, which is humans. It wants to continue to reproduce and spread. And if it kills off the host population, that would be a bad thing. So we can, with good amount of percentage of it happening, or let me rephrase that, there's a good probability that there's already saying this is so many times more transmissible. Well, that makes sense, but we do not know the lethality yet. We don't know if it's going to lead to more hospitalizations, if it's going to lead to more fatalities. We do not know that. We don't have enough information. This information just came out the other day. And so you get into these sell now, ask questions later. My bet is that, the unfortunate thing that we're seeing is that, in the Northern hemisphere now, in the northern parts, the northern climate areas, we're getting into upper respiratory virus seasonality. This is pretty much the time of the year when flus and colds and things are prevalent. That includes COVID. It's now going to be part of that repertoire of circulating upper respiratory viruses, whether we like it or not. It's going to become endemic. And so we don't know if this is going to lead to lockdowns. We don't know if this is going to lead to going back to what we saw a couple of years ago, where the economies get locked down. I suspect it won't, but I don't know. We can't know this until we see over the next couple of weeks how it plays out as far as lethality and what happens. We're going to see more cases in Europe and in North America, especially up north. We went through the seasonality in the South this last summer. This is pretty typical of what happens. And as the only thing that I'm concerned about is that because of these vaccines that have been put out there, is the virus adapting and selecting to evade the vaccines? That's the question I think that a lot of, not just me, but a lot of smart people are asking. So we don't have enough information to really say what's going to happen. But we do know that we had a flash crash today. There's no denying it. It scares people. A lot of people are going to be scared out of their positions. I didn't sell anything. I've been buying the last couple of days, and I'll be looking to see what happens on Monday. I might be adding to select positions. Nothing to me fundamentally has changed. There increased risk now, yes, but what are some of the risks I think that have happened? Well, if you're going to be talking about oil services, that probably got pushed out further, right? Because I think there's going to be oil executives and people that run oil companies sitting at their house over the weekend thinking, well, there's no way that we're going to, any capital spending we were thinking about moving forward with. I think that maybe probably gets capped. And so what I think is that you just exacerbate what was going to happen anyways, which is an energy crisis. It's just push it out maybe a little bit. So I wanted to talk about the so-called SPR releases. I found this chart. This is historically SPR releases typically backfire. And so here's in the last 20 years or so, different times that we had these blue dots signify releases from the SPR, or at least the announced releases. And you see that for the most part, after just about every time that we've announced a release of oil from the SPR, oil prices head higher. And the reason is because this is politically motivated. It's not, the volumes are not sufficient for, we're using 36 billion barrels of oil a year. Okay, that's 3,600 million barrels of oil. So if you release 50 million barrels in this coordinated, it's nothing, and that's not even 1%. It's 0.1%. So it's nothing. It's not going to have an effect. It has an effect psychologically and politically. I get it. Then you had this variant come out, and then you get this flash crash. So we were in the shoulder season anyway. So we were overbought. Let's look at, we were probably overbought here. We had pretty big move from 61 up to 85. That's, $24 just in from mid-August till now. And we were up, as of last week, we were up like 80% for the last year. So I'm not too worried yet about what I'm seeing. And I think that this is an overreaction. We'll have to see what happens next week as more information comes out and traders come back, the liquidity comes back, and we're able to see as we get more information and process it. The one thing we can't forget is winter's still coming, and some of the news, and I'll put links to the articles that I'm referencing. I won't delete them this time. Hopefully I'll be able to get them into the show notes, but winter's still coming. So, a strong winter-like Arctic front has been gripping East Asia in recent days. More impressive records fell elsewhere. Although it's still November, unprecedented heavy snow is hitting northern Japan's Hokkaido. They've got 2.5 feet of snow in 24 hours, making it the heaviest since records started in 1981 for any month of the year. In China, and 2 provinces there were among the hardest hit by the polar conditions, where provincial governments issued a level 2 weather disaster, the second highest level, which allows for the release of emergency relief funding. Snow totals reached record high levels across I can't pronounce the name of this province in China, but I'll put a link to this, right? We're seeing the same thing in Scotland and starting to move into Europe now. Very, very cold temperatures. This is what we were talking about, if you remember, a couple weeks ago. Some of the forecasts that I take into consideration was projecting that we would see polar incursions begin earlier than people thought into the first week of December. That's exactly what we're starting to see now. It doesn't necessarily, the thing that the forecasters I listen to can't predict is exactly where it's going to happen. As a jet stream gets pushed down for various reasons, and you get these polar incursions, can happen in Asia, Europe, or North America. And so we haven't seen any really big incursions into North America yet, but we're not even into the official start of winter, and we're already starting to see the cold weather. What's interesting is, oil had a flash crash, but if you look at natural gas was up 10% on Friday. So you need to understand, you need to have a thesis, you need to take in information. What is really happening? See, this is what happens. This is like a 1 in 10 or 15 year event, where oil drops over 10% in one day, and the emotion takes over, the fear takes over because of the volatility, and it pushes you out. It clouds your judgment. What's really happening. We're going into winter with low stocks of fuel everywhere. As a matter of fact, coal prices have been up recently too, because we don't have enough fuel stockpiled for the winter. And so it's, okay, we could have, this drop because of this new variant. We don't know what's going to happen on a low liquidity day. These things happen. But I think that, unless this is like worse than the original disease that cannot be mentioned, then I don't see how we get back to lockdowns. We are seeing it, some states, some countries in Europe, like Austria and some other countries are moving there, but this is seasonality. It has nothing to do with the new variant. And we know that these lockdowns don't work. So I don't know what the political situation is in each individual country, but I can tell you that at least in the United States, it's very divided, right? You're not probably going to see very much appetite for more lockdowns in red states. And I think the patience is being pushed to the limit. If you see the protests that I've been watching that you don't see on the mainstream news of people being interested in being locked down and these other things. So remains to be seen. But I think in the end, eventually you get through this and, the investment still isn't happening. It certainly isn't going to, like I said, encourage executives at oil companies to want to go to their board of directors after the oil price dropped like it did and say, oh, by the way, I want to increase drilling next year. I don't see it. So I think, I have an interesting slide I'll put up here, but I think our trip to $100 a barrel is still intact, although it may be, like I said earlier, be pushed out. And so here's this chart I was talking about. This comes from a guy I follow on a Substack. It's Open Insights. Guy's a hedge fund manager. He's been talking about these shortages for a while, and I like this chart he put together. Limited options to mitigate shortage. So you have a supply shortfall over here on the left, ways to mitigate, order of preference. Commercial inventories get drawn down. They're declining, check. OPEC spare capacity declining, politically challenging. That's something we've been talking about. Is OPEC spare capacity actually what OPEC says it is? Many people think it's not. I'm one of those people. Short cycle projects, that's something that you can just do very quickly and get some production. But there's infrastructure constraints to preclude that. And now we're into this, strategic reserves, one time and reserved for emergencies. So we're releasing the strategic petroleum reserves in this so-called coordinated effort, although some of the participants in it, like South Korea and the UK, they were just like 3 or 4 or 5 million barrels releases, basically symbolic. Like I said, when you're using 36 billion barrels of oil a year, give or take, that's 3,600 million barrels. So 50 million barrels, like I said, isn't even slightly over 0.1%. It's nothing. And so the next thing that happens is conservation. This will be insufficient and delayed. And then finally, demand destruction as higher prices kick in. And people, we don't know what that's going to be. So we're on our way. This is happening as shown here. And so, like I said, we don't know the full effects. We're going to have to watch and see what happens. But the other thing that you might want to take into consideration is OPEC meets next week. I think next week. And they're on track. They were in a process of adding back 400,000 barrels per day of sideline production every month, which started in August. And they were going to do that each month going into the end of the year. With the release and this flash crash, do they hold off on the next increase? Does this give them cover? Because a lot of the members, or not a lot of them, but several of the members can't meet their quotas because they're having issues with their decline rates and their lack of spending on new reserves. I don't know. So there's a lot of plates in the air, but I still think that, like I said, I still think that the view that we've had around this has taken a temporary hit, but I still think that longer term, we're still heading for an energy crisis. People, Thanksgiving, here's something from Gas Buddy. They track gasoline usage and pricing in the US. According to Gas Buddy data, Wednesday, that's the previous Wednesday, day before Thanksgiving, US gasoline demand rose 25% from the prior Wednesday because everybody's traveling and driving for Thanksgiving, and was 25% above the average of the last 4 Wednesdays, week to date. We're seeing the highest week for demand ever recorded. So people aren't necessarily flying, even though air travel was projected to be very high also. So, we're seeing the demand is there. Next slide will show you what that means. So this is U.S. gasoline inventories. Obviously, you see this is the band for the 5-year average, if you will, the last 5 years. And you see this was 2015 to 2020 in here, or this line here. This is this pink line is 2021. You see where we're at. So gasoline inventories are already well below what we've seen the last several years and below the 5-year average. So you have to take these into consideration too. So what what is going to be the narrative? Like I said before, it's going to take several weeks before we have sufficient information to know what's really going to happen. Expect cases to go up. Like I said, you're going to see cases going up in the northern states. You're already seeing that, okay? You're going to see cases going up in parts of Europe, okay? Because it's getting cold. What happens? People's nasal passages dry out. They're inside. The mucus isn't catching the viruses. They're transmitting it around in these closed spaces. You're going to see cases go up. So, like I said, we've already seen that down in the South over the last summer, and that's seasonality, something that's not even talked about. So you got to know what's really going on. You got to think, is this something new, or is this something that we see every year anyways with upper respiratory viruses? And like we said, this disease that cannot be mentioned is now becoming endemic and part of the rotating seasonal upper respiratory virus rotation. And so closing this week, I wanted to show this again. This is a chart of the China credit impulse 12-month net change versus industrial / precious metals ratio year over year. And so you see the blue line is the credit impulse, the Chinese credit impulse. Why is this important? Well, in the past, at least going back for almost 20 years, when China has turned off the credit taps, we've seen industrial metal prices plunge, okay? This has been pretty consistent. You see that the credit impulse has collapsed, and you see that we're at an all-time high here for industrial precious metals ratio year over year percentage change. So what are we looking at? We'll be looking to see, because we are in a lot of these commodities and resource stocks, if this is going to follow through. China is the largest user of industrial commodities, and they have shut off their credit impulse. Now, is it starting to turn? I don't know. This has been a pretty dramatic drop. You can see typically when it's dropped before, it usually turns, they turn it around and go through another credit expansion cycle, but we don't really know what's going on in China. So we have to watch this. This is important. We've talked about this. I talked about this 4 or 5 months ago, that going into the end of the year in early Q1 of 2022, that this could be something that we'll be watching. And so we'll be watching this. The indicator that I use tell me to get out has not turned yet. As a matter of fact, it was up today, which was shocking, or yesterday. But this is something I'm watching because in the past, like I said, with China being such a big user of industrial commodities, you've seen iron ore prices crash. You've seen some other prices down. But in the energy complex, we've seen this historic move higher in a lot of, like coal, thermal coal, natural gas, especially LNG, and oil until recently. So we'll have to see what happens, and we may have to pull the plug. And this is going to shock people. I mean, I'm not going to sit around here and ride this down all the way down. It'd be easier. So this may be, we may be pulling the plug sooner rather than later on this whole deal. So lots of things to watch, but right now everything is intact, but we shall see. The other thing we have to be cognizant of is, with this new variant and with monetary policy, does that mean that monetary policy and the taper gets pushed out? We don't know. There's a lot of things in play. So like I said, we said all along that you're going to be in these markets, they're going to be very volatile, and that you have to understand that it's not a free ride, it's not a free lunch. And I try to use volatility to my advantage. I have a certain thesis around energy. I feel like it's intact still. And so when prices drop like this, I'm inclined to look for bargains, or look, I have the list of companies that I like, or I feel are going to benefit from this energy crisis. And if they go on sale, call it a Black Friday sale if you'd like, I'm looking to add. And that's hard to do, guys. That's a hard thing to do. And you have to check it's a gut check. It's a thesis check. Something we've talked about before too. So if you're just sitting back listening to me or listening to somebody else on the internet, and you're following what other people do, this is why you have to do your own work. This is why you have to create your own conviction. This is why you have to sit down and write down what your thesis is. I can give you ideas, other people can give you ideas, but you're not in my head. My risk tolerance is not your risk tolerance. So this is how people get chased in and out of things, right? The shiny object comes by, everything's moving higher. and they jump in, and then it turns against them, and then they get scared out because they never had any conviction, because they never knew why they were buying it in the first place. The only reason that most people buy is because things are going up. So that's pretty much it. It's going to take a couple of weeks to develop. We'll see what's happening, but we will update as necessary. And so that's what we're going to have to do. All right, guys, that's it for this week. Not much, like I said, not much more to really talk about. This was the big news, and we'll just have to watch how it pans out. Appreciate the support. Appreciate you listening, and we'll talk to you next week, guys.